day all. Ira Epstein of Linn and Associates with your metals market wrap-up. And this is for Monday, the 9th of September, 2019, at just about 5:25 p.m. Central Daylight Time. What this means is that we're in the next trading session of Tuesday already. So the prices that you're seeing on the boards that are flashing price at this point, if they don't have an S after them, that's where the market is as I'm talking to you. And as you can see, gold is down about $3.50, $4 from where the market finished on Monday. We are down in the silver about 9 cents from where we finished. Now, I've just finished my metals report, and I did gold, an update. I'll talk to you about this at the end of this update, tell you how you can get it and things of that nature, but let me finish where we're at. We can see the stock market still rallying. I'm watching all the analysts on TV, and they admit to confusion. The U.S. economy, especially manufacturing, slowing down. However, what you're seeing is the consumer rescuing everything. The Federal Reserve today, it showed consumer credit, what they're doing and it came out late, came out in the afternoon. And I'm telling you, the consumers out there in all categories just expanding the credit as they feel good about the economy. We'll see what that means as we get into the foreign currency trade tonight. But remember, we have the European Central Bank monetary policy decision coming out Thursday. It'll be the last meeting with Mario Draghi as president of the European Central Bank. What he does, how much he does, what he puts on the table for the new ECB president, Ms. Lagarde, that's going to be very, very interesting to see, and it's something you've got to consider very strong. The fast and your trading plans. You're also getting an upward move in the energy markets. OPEC has a meeting this Thursday where they, Russia, and others come in to make a decision. How are they doing with their cuts? What else can they be doing? So very important meetings. I can't stress it enough. And then next week we have the FOMC meeting. So let's just go to where the weekly charts are. And obviously you can see on a basis of weekly chart closes, where you're at right now is 1,570, down approximately $26 from the high close. Not necessarily the high close. When we come over to the markets, you can see that you were much higher than this in the D-Gold into the 1566 area, if I'm correct, and have been pulling back all the way through here as the market's got a pattern now when it got up to the 1566.20 level where it peaked out, and the market is corrected from there from 1566 approximately $50 so far. That's a good sized correction in the market. What about where support might come in? Well, when you look at moving averages, it's certainly not the 18-day average or under it. In the process, you've got the higher high, lower low, so the bias is down as the market is down here, but you're not in a downtrend. When I go to the Bollinger Band, that's now down to 1496. So the first major support, as I see it, is that number, the 1496 level. Why? Just what I say, when you're rallying in a market, especially a sideways pattern that's broad, the first time you hit it, be it to the upside or, folks, to the downside. And admittedly, gold's been in an uptrend, so me giving you examples on this downtrend, I can't find them on the short charts that we keep for the recordings that we do for you. But believe me, that's what I teach, that's what I say, doesn't mean I'm right. If that gives ground, the next number could be 1404. In terms of momentum, you are oversold as can be. You've got your momentum numbers down to 17, as you can see, and 38. Any reading under 30 is oversold. So we have a market that's lost its way on the uptrend. It's in a corrective mode. We have a pattern of a higher high, lower low, and the market is oversold with a potential target that could come in at the lower Bollinger Band. As we come to the close today on the GLD popular ETF, it's very similar. You have a higher high, you got up to the upper Bollinger Band, you stopped like that. I have no reason to believe that the opposite can't be true if you hit the lower band. And the reason is you developed this sideways action as the market is in a pattern of, I don't know, but I think it's a consolidation pattern that's developing in the marketplace. And I say that because without knowing what the ECB is going to do or what the FOMC is going to do, we have to see what it does. And the uncertainty of that has put the risk-on trade in a way back into place where stocks are rallying again, the dollar's slightly stronger, and we're seeing bonds and notes fall in the futures, which means yield has come back into U.S. Treasuries for the time being. As we look at GDX, wherever that lower number comes in, that's where I think the support is going to be. Again, oversold, potential 27.36, resistance back at the 18-day average of closes, not a trend. Higher high, lower low. Gold-silver ratio, as you can see, you came down under 80, got a bounce back, and you're about 83.5, 83.40 right now. In the silver, I'm looking for the support to come in against the 18-day average of closes. Like the gold, you're not in an uptrend any longer. You have a pattern of a higher high and a lower low. Again, I think this is a consolidation pattern, and this market has worked its way, past tense now, has succeeded in working its way out of an overbought condition after it lost the bullish embedded reading, which was in place right here, until you get the red line to close under 80. It happened on Thursday. It followed through on Friday, and it's making a run for that 18-day average, as is often, not always, as is often the case. In the copper market, stability, but what you're betting on here is world picking up. Maybe the U.S.-China can agree to something. I have my doubts about that personally. I think that they're going to agree to have the 14th round of talks and no more than that, because I don't think China wants to do a deal in front of the anniversary, their 70th anniversary of this new government, if you will, and have to say, well, we just made a deal with the U.S. and we've given up on our trade and we're giving up to them intellectual property. I don't buy any of that. You could, I don't. It's just what I think. Resistance back up here at 265.30. Give me into next year when we get closer after this is gone, after Christmas is gone, the new year, and of course the President Trump getting more serious about trade. And I don't think that he's not that serious, but he's also got to think about politics at that point. So a win may become something a bit different than he would call it today. In the platinum market, you've got the higher lows, higher highs. That's bullish. You're in a correction like the gold. So in other words, at any point, you can get a run in this market back towards the 18-day average of closes. Markets don't have to do that. And the difference between gold, silver, and this market, you still have the pattern of higher lows and higher highs. You don't have them, which makes it easier for that market to make a run for the 18-day average. This becomes more difficult, as does the run in the palladium. And palladium still has the embedded reading. It has not lost it, and we're open tonight. That is still strength in this market. Suddenly, this is the strongest, technically speaking, of the metal markets, this market, which is interesting to me as can be. I could argue the platinum's right there with it as well. So those have taken over temporary leadership. And what we're doing right now is fighting in the gold at the 18-day average of closes, as the near-term trend is attempting to get lower highs. Now you have higher lows. So where are we in this market? That's going to be the interesting part of it. The question is, if you get back over the 96.48 level, you actually confirm higher lows, then a higher high, put back into play, getting up to 98.96 again, and this is just a correction. You're at a very important point in this market. So let me tell you what I did. I just did the gold report. I haven't done one in a long time for you. I did silver last time, so I decided let's catch up with gold. And I might even do another silver report this week once I get closer to the European Central Bank announcement. I'd like to get that through and then do the report on the silver, but I think gold should be done in front of that. So in this report, I have covered for you the seasonality. I have covered price counts. I have given you a quarterly gold report. I am giving you in this report a monthly chart. I'm giving you the weekly, and I am going to the daily. You can't say I haven't covered the whole spectrum. Now, how you get it is pretty simple. You're going to go to our website, and on the website, you're going to go to www.iraepstein.com. You're going to go into, I think it's our education and research area, and you're going to see Ira's Metal Report. It'll be up today about, right now it's 5:25, after 6 p.m. Central Daylight Time. So anytime after that, it'll be up. I'm rendering it as I'm doing this for you right now. If you have trouble in any manner getting to it, just simply call our staff, 866-973-2077 on Tuesday. They'll work it out with you and get you right in there. I'm Ira. You have a good day. Hope you like the report, and I'll see you tomorrow.